Welcome back to another video. Today we're going to be taking a look at the comparisons of the 2008 financial crisis as it relates to the housing market and see what is happening now and whether we could be headed for something similar. There's a lot of talk about a housing crash around the corner, so I want to dive into the data and kind of get an idea of what's going on and how we're looking now relative to 2006, 2007, and the height of the financial crisis in around 2008. So if you're interested, subscribe for more. My name's Ian Phillips. I'm a realtor in Southern California, and I love housing data, so I'm uploading weekly videos, diving into the market, talking about what's going on in the economy and how that can relate to the housing market, giving you an idea of where things could be headed over the next couple years. So let's get straight into the data. So we're going to be taking a look at active inventory in the entire country as well as months supply of inventory, which is my personal favorite metric for determining the strength and health of the housing market. Months supply of inventory takes into account supply and demand. So essentially it's measuring active homes available for sale relative to how many homes are being sold, which is an indication of how many buyers are in the market. So it's a great metric for determining the overall trend of where home values are going to be headed. So this blue line on the chart is the month's supply of inventory, which right now is sitting at around 4.4. Now, relative to where we were in 2022, we were sitting at 1.6 months of available supply back in 2022, and now we're sitting at 4.4. So it's nice to see month supply of inventory increasing because home buyers have really had a hard time for the last 2 to 3 years, having to sometimes overpay for homes, maybe not getting the home they actually love just to become a homeowner. So now we're seeing inventory increasing while demand has been declining. So buyers have a little more negotiating power in the current market. But as a seller, expect your home to sit on the market for longer. We aren't in 2021 and the first half of 2022 anymore, where buyers are overpaying for homes and getting themselves 5% above list price, 10% above list price. That's not happening anymore. Sure, there are the occasional homes that are listed way below market value, selling for significantly higher than what they're listed for, but that's just because they are priced extremely aggressively. Housing inventory, we are now at a 5-year high. Right now, it seems to be approaching around 1.5 million homes available for sale, which is interesting because the last time we saw this metric was around April of 2020, when we had around 2.5% mortgage rates, which we probably won't see for quite some time. But this only happened very briefly, and prior to that, we were at levels like this around 2019 when we saw around 1.4 million homes available for sale. But what's very interesting is around this period of time, month's supply of inventory is actually lower than it is right now. So that tells me that 5 years ago, 6 years ago in 2019, there were more buyers in the market than there are right now. So we could potentially see inventory continuing to increase into the second half of 2025 and potentially into 2026 because buyer demand is lower now than it has been for the last 5 to 6 years. Now, do keep in mind that this time period here, 2013 all the way to 2019, is what I like to consider more of a normal market. Mortgage rates were around 5.5%, and we had normal levels of inventory sort of between 1.9, I think it got as high as 2.25 million, so kind of around that 2 million homes available for sale mark. And we had a month supply of inventory sitting between, I think it got as high as 5.6 and then down to 4. So kind of bouncing between the levels that it is right now. And what's very interesting about this is that we are still below those normal market metrics. So if we continue to see inventory increase, maybe it stays around 2 million homes available for sale, we get month supply of inventory back up to 5.5, that would put us back into a normal market. But if we continue to see inventory skyrocketing, then we approach the territory of the financial crisis. When we had the most homes available for sale in history, month supply of inventory was 11, so buyers were almost non-existent relative to the amount of homes available for sale, and we almost saw 4 million homes on the market, which is incredible, really. During this period of time, it was essentially buy one, get one free in the housing market. Most parts of the country dropped around 50%, which is a pretty devastating crash. I was not in real estate during that period of time. I'm only 30 years old, so I didn't get to see that firsthand, but I knew a lot of realtors, I knew a lot of people that were in the business around that period of time, and it was devastating for so many individuals. Now, do I think this is going to happen again? Honestly, it's too soon to tell. Could we see inventory get back to these normal levels, 2 million homes, 2.1 million homes available for sale? I honestly hope so. I don't really want to be in a situation where we have homes appreciating 10, 15% every single year. That's just going to make it impossible for first-time home buyers to get into the market. But now we are seeing more negotiation happening for buyers than we've ever seen for the last 5 years. You're seeing pockets of the country where inventory is absolutely skyrocketing. I did a video on Texas and Florida. Be sure to check that out on my page, but they are experiencing a 10-year high in available homes for sale. And as of right now, they make up roughly between 30 and 40% of all homes in the entire country. So it's very possible that you see a housing crash or correction in parts of the country, while other parts of the country sort of experience more of a normal market. Maybe you have modest appreciation, 2 to 3%. Maybe you have slightly negative 2 to 3%, or maybe it's just a flat year for home values in a lot of the country. But in my opinion, you are going to see a pretty decent housing correction, if not a crash, in places like Texas and Florida, because supply is absolutely skyrocketing and you're not seeing buyers stepping into the market, buying these homes because, we're going to take a look at another chart right now, of new construction. New construction is what is killing so many markets right now. You are seeing new construction absolutely skyrocket. Home builders are desperate to sell so many of their homes. They're offering the most incredible incentives I've ever seen. I'm in escrow right now representing a buyer for a new build, and they are getting like a 10 to 15% discount buying a new build compared to what's on the market because they just want to get rid of the homes. And you are seeing new builder inventory approach levels of the 2008 financial crisis, which is absolutely going to have an impact in markets where there's a lot of new construction, Texas and Florida. And that is likely why you're seeing existing home sales skyrocket as well, because buyers, when they're looking at a house on the market, they're going to have to pay their loan fees, closing costs, everything, or they could just go to a builder, get a 10% discount on an almost identical house, and have all of their closing costs paid for. As a buyer, if you're looking in an area where there's new construction, it's kind of a no-brainer to go to the new build rather than buy the home that's already on the market. You're not going to have anywhere near the discount as getting the new construction versus the seller who's just trying to sell their home. And that is why I think you're probably going to see a decent correction, if not a crash, in a lot of the country. But when we look at existing home sales, month supply of inventory, you can see during the financial crisis, right before this happened, when we saw buyer demand skyrocketing, everyone and their grandma was buying a home. There's a famous movie, The Big Short, one of my favorite movies. Highly recommend you go check that out. It explains exactly what happened. But essentially, people who couldn't even qualify for a loan were stepping into the housing market, buying homes. And during the peak demand, which was around 2005, 2006, we saw 2.15 million homes available for sale, and month supply of inventory hit 3.6. So we went significantly lower during the COVID boom, lowest mortgage rates in history, buyer surge that we saw in the housing market. It'll be interesting to see what they call this event in the future. I'm sure they'll coin a name that is correlated to that. But we saw 850,000 homes on the market around 2022 when home values peaked in the overall country, and we saw 1.17 months of available supply. So significantly lower than where it got during peak demand leading up to the 2008 financial crisis. So in my opinion, more than likely, overall inventory in the country is just going to get back to a normal market. 2 million homes likely available for sale. Month supply of inventory, maybe we get up to 6 months and buyers have a lot more control in the market relative to sellers. But I don't think we're going to get to this 4 million homes available for sale. Now, what could trigger that? Well, unemployment is likely going to be the major factor that people need to look out for when determining the overall strength of the housing market. Sure, mortgage rates are probably going to drop in the second half of this year and in the first half of 2026. But if we have the unemployment skyrocketing like it did during 2008, it's not going to matter what mortgage rates did. I'll pull up the unemployment rate in the US right now, just so you can get an idea. Oops, excuse me, this is Florida. Just so you can get an idea of what the overall strength of the economy is doing right now. So unemployment is around 4.2%. But during the financial crisis, which is what you need to keep an eye on if we're going to see a huge drop in home values, which again, I don't think is going to occur in the overall country, pockets of the country, very, very possible. But unemployment went up so quickly that mortgage rates dropping did absolutely nothing for the housing market. You can see we got up to 10% unemployment in a matter of 2 years. That is very, very rapid job loss. And we are not seeing that as of right now anyway. So if unemployment can have a continuous slow uptrend, maybe we get to 4.5, maybe we get to as high as 5%, you're probably going to see mortgage rates back into the 5s again. That would be an ideal scenario for a lot of buyers. But if we see the unemployment rate creeping above 5, getting towards 6, getting towards 7, it's absolutely going to trigger a financial event. Is it a financial crisis? I have no idea. Is it going to cause house prices to crash? Very possible if the unemployment rate gets out of control. And that's why the Federal Reserve is in such a difficult situation now, because if they cut rates too soon, then you're potentially going to have inflation resurging, skyrocketing again, and that would cause mortgage rates to increase. But if they cut rates too late, you could have an unemployment rate spiral where we have unemployment skyrocketing. Now, as of right now, there's no data to support any of this. It's just speculation. But what's good news in terms of whether or not we're going to get mortgage rates is that inflation has shown pretty strong downtrend toward 2%, and that is what the Fed is waiting for. And unemployment has been very resilient. But if we get some prints going towards 4.5%, 5%, my opinion, we're going to see very low mortgage rates in the first half of 2026. So all of this, I'll be keeping everyone updated on what's going on in the economy, what's going on with home values, how it's all related. So if you like this video, subscribe for more, and I'll see you next time.